Hey everybody, I've been seeing a lot of people on TikTok lately saying that they don't feel like this whole investing and stock trading thing is for them because it just seems too much like gambling. So I wanted to run over a couple of examples when I think of gambling, what I think about. First of all, I think I'm crooked. Oh yeah, that's better. Am I better? Is that better? Hi everybody. Hey everybody. It just feels too much like gambling. And I understand that. It does feel a little bit like gambling sometimes, especially with this whole GameStop situation lately. Everyone's copying the trend, riding it higher and higher. You're hearing about it, they're hearing about it, people at the gym are talking about it. Everyone's talking about GameStop. Oh, what the hell? I'm just gonna throw in a little bit of money. And what happens the second you put in a little bit of money? It goes down. And you sell, and you take a loss, and you feel like, fuck investing. I hate this Wall Street shit. But what happens next? The stock goes back up. And you're sitting there going, damn it. So you do it again. You rush back in, you buy more, and it goes down again. And you go, I can't believe this. And you take a second loss. And that's when you walk away discouraged and going, you know what, Wall Street, it's just not for me. I'm not about this whole trading thing. I'm not about this whole investing thing. The difference is what happened with GameStop wasn't really investing, and it wasn't really even trading. It was just gambling. So when I think of gambling, here's what I think about. Let's say I go to Vegas with $100 bill and I walk over to that roulette table, I slap that 100 on the table and I tell the dealer, $100 on 13. And he puts that little chip on 13, he drops a little marble in the spinny thing and it starts going. Once that marble is in and that spinny thing is spinning, at no point can I tell the dealer, stop it, stop the spin, I changed my mind, I have a bad feeling about this, I put 100 on, why don't you keep 10 bucks, give me back my 90, we'll call it a day, I'm just gonna walk away. You can't do that. If that little marble or ball or whatever lands on anything other than 13, you have lost 100% of your money. That is a gamble. If you go to 7-Eleven with a $20 bill and you go up to that cashier and you go, hey, give me that scratch off over there. And you start scratching. And maybe there's 6 tabs on that little ticket. 1, nope. 2, nope. And you're going, oh shit, I think I got a loser. You can't go up to that cashier and go, you know what? This ticket's a loser. I don't want it. I changed my mind. You can't go into a casino with a $5 bill and slide it into a slot machine and hit spin and sit back and watch those things, a cherry, another cherry, and that third one's rolling around and you're like, oh shit, it's gonna land on a banana and I'm gonna lose. I changed my mind. Give me back $4. You can keep the last dollar. We'll call it a day. You can't do that. But you can do that in the stock market. When I hear 95% of stock traders lose, what that means to me is they give up because they don't have a plan, they don't have a strategy. I use technical analysis, I have experience, I look at the charts, I make decisions based on past volatility. Hey, this is a stock that moves this amount in high volume times. Okay, knowing that, I can make a more educated guess that next time there's significant news or the chart setup looks the same, that the stock might behave the way it has in the past. And if I'm wrong, all I do is cut my losses. And you can make your loss whatever you want, whether it's 1% all the way up to 10%. Most stock traders stick between 3 to 5%, but I don't cut my losses on my good long-term quality investments. Let's use Apple as an example. Just a few weeks ago, Apple was $145 a share. Up until like the last couple days, it was trading around 120. If you had purchased at 145, you'd be sitting on around an 11% loss. Do you cut your losses and say, it's a bad stock, I'm out of this? No, it's Apple. Right? Yes, if it's a very volatile, high risk, kind of garbage penny stock. Yes. If it's a long-term investment, no. You hold, you don't cut losses, not on something as established and well-regarded and profitable as Apple. If anything, you take it as an opportunity to buy a little bit more. It's called buying the dip. And that's another popular phrase that is being like kind of overused lately on TikTok. I'm seeing a lot of new investors. Every time the market is down, buy the dip, buy the dip. You want to wait oftentimes for these stocks to consolidate before you call it a dip. We don't know what's going on day to day. News is constantly changing. So what we might think is just a one-day sell-off could be just a one-day sell-off, but it could also be the beginning of a downturn. We don't know. I caution against These people who are rushing in to buy every single dip because one day, maybe tomorrow, maybe in a year, maybe in 5 years, there's going to be some sort of major economic disaster. The markets are going to sell off. There's going to be a recession, a bear market, whatever it may be. And if you're putting in a little bit every time the market goes down, oh, Apple's 140, oh, Apple's 135, oh, Apple's 130, buy. Then when there is a big sell-off in the markets, you're not going to have any money to buy a significant portion at a big sell-off. If you're buying every single down day, 140, 135, 130, and then it drops to 80, you're going to be sitting there going, well, now I don't have any money to buy it at 80. I caution against these people who are rushing in to buy every single dip. It's not a bad strategy to average down and scale down in your long-term and scale in on your long-term investments. I just worry that a lot of inexperienced traders are using every down day to proclaim, buy the dip. But when it comes to investing, but last of all, I hear so many people say, investing seems like gambling. And that's where people are getting, I think frankly, they're getting a little confused. I hate to be one of those stocks go up people, but over the long term, historically speaking, good quality stocks do go up over the lifetime. Of course, there are going to be opportunities where those stocks get slaughtered and you can scoop up a bunch of shares in these really reliable, good, high quality companies. But it's the day-to-day volatility that frightens people. And when you are not a trader, but you are an investor, it's important to differentiate between day-to-day volatility and long-term investing. So the best example I'm going to give you is a made-up company inspired by Apple. Let's say there is a company that's trading around $10 a share. And you go and you buy 100 shares of that company. And you go and you buy 100 shares of that company. Let's just call it company A. You buy 100 shares of that company. $10 a share, $1,000 investment. You walk outside, you get hit by a bus and you are in a coma. 20 years later, you wake up from that coma and you look over to that nurse and you go, hey, what's the share price of company A? And she goes, oh, it's $100 a share. You're sitting there going, yeah, because in your mind, you still have your 100 shares. But here's what you don't know about company A. Over the last 20 years, they have split, let's say 3 times. So the first split, and let's say they're always 2-for-1 splits just to make the math easy. Let's say you've got your 100 shares and they do a 2-for-1 split. Now you've got 200 shares. Years later, they do another 2-for-1 split and you end up with 400 shares. Now let's say they do one more 2-for-1 split. What that means is they'll give you 2 for every 1 that you have. So if you have 400 shares and they do one more split, you walk away with 800 shares. Now let's say you weren't in that coma and you bought your 100 shares of company A at $10 and it went from 10 to 20. Oh my God, you've doubled your money. You might feel tempted to sell, whether it took a couple months or a year, whatever. You might be in that moment going, I should sell, I should take my profit, I've doubled my money. Haha, not so fast. Now, it doesn't mean that every company that you buy is going to split multiple times. It might not. You might buy company B and it goes from $50 to $100 over a 10-year period. Or it might go from $50 to $200 and they might never do a split. Or it might go from 50 to 75 in a 10-year period, but they pay a 4% dividend. So you're able to build and build and build a position over time. That's the benefit of long-term investing over time. One of the things I like to do as a trader, because I understand that a lot of people want to get rich quick, is what I like to do is I like to live off of my day trades and my swing trades and take any leftover money and put them in my investments. So I'm doing one of 2 things. I'm profiting in the short term. I'm making money off of my trades. Most people think, oh, day traders, stock traders, they must be millionaires. But the reality is it takes a lot of money to be a day trader. If you are trading with hundreds of thousands of dollars, then yes, in theory, you could make $1 million. But if you're trading with 10,000 or 20 or 30,000, you might not. Or look at it like this. If your goal is to make $200 per trade, do you think you're going to be a millionaire on that? No, probably not. But those $200 trades will add up. And over time, first you pay off your bills, right? You pay off your rent, you put your money in your emergency savings account. You do all those things, but anything left over after that, it's still not going to make you a millionaire. What you should be doing, at least what I do, is I take any leftover money and I don't spend it on clothes or fancy shoes or video games or stuff like that. What I do is I take that money and I funnel it into my long-term dividend paying stocks or my growth stocks. That's where the long-term money is made. And I don't worry about the day-to-day volatility. I just don't. Yes, I pay attention. Yes, I read the news. But I don't panic and sell because Apple is down 12%. I buy more. It also depends on the company. And it depends, like I said, on the news. Not every company is like Apple. Sometimes companies start off as these great powerhouse companies and they get destroyed, like General Electric, like Ford, which used to be a $30 stock and paid an unbelievable dividend. Now, Ford is around $12. Ford is coming back and it's been progressively moving higher and higher. But you don't want to get stuck buying in at 30 and then watching it go all the way down. I think it went down to like 4 at one point. You have to read the news and you have to cut losses on your long-term investments when the news tells you this is bad. You have to be able to make those decisions. But sometimes companies just go down because the whole market is going down and everyone's scared, or they're taking profits, they're locking in money, or they just want to hoard their money so they can buy back at lower prices down the road. It's important that you read and pay attention to the news. So for all the people who are scared and nervous, oh, I don't want to trade stocks, it's gambling. Remember those casino analogies. Remember that 7-Eleven analogy. You can't go to the cashier at 7-Eleven and go, I changed my mind. But you can do that with stocks. That should ease your mind a little bit, put you at ease when it comes to trading these riskier stocks. And when it comes to your long-term investments, again, don't get so caught up in the volatility. Think about the example of company A that was $10 and did these multiple splits over the years, resulting in a very large profit for you. And I hate those kind of way back when examples. I really do. Because they're not helpful in the sense that a lot of traders go, well, every stock is going to be like that. But they are helpful in the sense that they lessen your anxiety when it comes to investing. So I hope this video was helpful. I hope you learned something. If you did, please smash that subscribe button. Like the video, thumbs up the video if you liked it, thumbs down the video if you didn't like it. And thanks for watching. Have a good day.